This is Alan Bush with the Daily Financial Forecast for Thursday, January 9th. Stock index futures coming under a little pressure this morning. We did have news that U.S. employers announced 38,792 job cuts in December of 2024, and that is the least in 5 months. Traders are closely watching the Federal Reserve's 2025 policy outlook, focusing on the likelihood of fewer interest rate cuts from the FOMC. However, this bearish influence is likely to be offset by prospects of improving corporate earnings, as the U.S. economy is likely to grow faster than the consensus view. And in the currency markets, the dollar index trading a little bit higher this morning. The long-term fundamentals and technicals still are supportive to the greenback, and higher prices are likely. We did have news that Germany recorded the largest number of company insolvencies since 2009. That was in the last quarter of 2024. So the long-term fundamentals and technicals still are bearish for the euro currency and the British pound. And in fact, I think most currencies against the US dollar will probably continue to work lower. Moving over to the interest rate futures markets, we are seeing a mixed trade. The minutes from the Federal Reserve's December 18th policy meeting, which were released yesterday, revealed that the central bank may be close to a point where it would be appropriate to slow the pace of monetary easing policies. Financial futures markets are predicting that the Fed will remain on hold at the January meeting, also at the March meeting. However, there is a probability that the Fed may be cutting rates at the May meeting by 25 basis points. As far as the outlook for futures, still looks like we can see the futures at the long end of the curve, namely the 30-year Treasury bond futures, coming under pressure, while futures at the front end of the curve will probably just trade sideways. So good trading, everyone. Once again, remember, these are my opinions alone and are not the opinions of ADMIS or ADM.